As of June 2023, you need $322,580.64 invested into SCHD to make on average $1,000 a month in dividends. Oh, only $300K. Let me just go get that from the hole in my backyard where I keep my treasure. For those of us that don't have piles of cash lying around, stick around to find out how we can realistically get to $1,000 a month in passive income from SCHD. Charles Schwab has $7 trillion under management, and 46.6 billion of those dollars are in one single ETF. That ETF is SCHD, or the Schwab US Equity ETF. Now, you might have heard about this ETF because of its passive income dividend potential and the fact that it's been growing at a rate similar to the S&P 500. Now, of course, the higher the dividend, the less you actually need to invest to make $1,000 a month from an ETF. And SCHD's dividend is not the highest I've ever seen. But one thing that I personally love about SCHD is the fact that you have a chance to grow your position to a high enough dollar amount where you won't need to sell your shares to cover the cost of living in retirement, since you can just use the dividend instead. Given that it's growing at a rate similar to the overall US market, the future looks bright for this ETF, and it's no surprise why it's so popular. Currently sitting at a 3.72% dividend yield, investors earned 66 cents per share owned based on the June 21st, 2023 quarterly dividend, and in the past, quarterly dividends payouts have been as high as 70 cents per share. But with any dividend stock or ETF, before we put our hard-earned money into it, the question needs to be asked and answered. Is this a dividend trap? A dividend trap is a stock or ETF that offers a high dividend, but the actual price of the asset continues to fall over time. So you might be getting a yearly, quarterly, or even monthly passive income from the form of dividends, but overall the value of your investment might be less than what you originally paid. Basically, you're getting paid to lose money. And if you have these assets in a taxable account, that can be an even worse situation. You could actually be paying to lose money because taxes might apply to you, and the IRS always gets their cut. The US market historically has a general tendency to go up in value over time. So the simplest comparison I've come up with is to match up an asset against the performance of the S&P 500, which is considered the benchmark. SCHD was created in October of 2011, and if you invested $10,000 and reinvested the dividends overall, you would have $41,492.73 in June of 2023, which gives us an annual return of about 12.98%. If you invested the same $10,000 in SPY over the same period, you would have around $45,155.55, which is an annual return of about 13.8%. So we can clearly see that from a dollars in, dollars out perspective, the benchmark S&P 500 outperformed SCHD. But I wouldn't consider this a dividend trap because it technically did go up in value. But just because SCHD seems to pass my very basic test, that doesn't mean it will in the future, so you're going to want to keep an eye on SCHD. The ETF restructures its holdings periodically, so whenever this happens, you always want to make sure that it still makes sense and is in line with your financial goals. But focusing on the dollars, SCHD did make investors money over the course of its existence, but not as much as the S&P 500. Why would anyone buy this ETF if you could just buy the benchmark, which historically has been a good asset to own overall? SCHD's long-term benefit is the ability to generate high dividends. You invest in the S&P 500 through an ETF like VOO, with a dividend yield of around 1.5%, you would need less money invested in something like SCHD with a higher dividend yield. So with SCHD, you could keep the shares and not have to sell to pay off your bills in your retirement because you're getting more money every quarter. I think this ETF is the sweet spot for people looking for future cash flow and overall returns. But there are some risks. Because the S&P 500 consists of the 500 largest US companies by market cap, and SCHD only has around 104 holdings, SCHD is not as diverse as people may think it is. In addition, this ETF is managed by someone else. We as investors have no say into what goes into the fund and what goes out of the fund. I personally think that's an advantage though, because it lets me focus on other things, like this YouTube channel. If you're enjoying the video, click that like button and subscribe for more content. Now, SCHD also has another major disadvantage that is not nearly talked about enough. It's the fact that it has literally zero exposure to real estate. Now, even after I told you SCHD didn't perform as well as the S&P 500, even after I told you we don't control what happens to the funds, even after I told you it's not as diverse as other investments, and even after I remind you that I am not a financial advisor, this is not financial advice, and you should speak to a professional about your specific situation, if you still want to buy SCHD with the intention of making $1,000 in passive income every month, here's the math on how much you would need. Now remember, SCHD doesn't pay a regular dividend. It pays quarterly, but the amount it pays out changes. Don't worry, the math can still be worked out to give us an estimate on how much we would need to make $1,000 $1,000 every month. $1,000 a month is the same thing as saying $12,000 a year, and SCHD has a current dividend yield of 3.72%. And those two numbers are actually all we need. $12,000 in dividends per year divided by 8%, expressed as a number, which is 0.08, gives us $322,580.64. Notice I never said how much SCHD was trading for because it doesn't matter in terms of what we need to calculate. How much money we get out of a dividend stock is dependent on the dividend yield and how much money we put into the position. SCHD as of June 23rd is trading at $71.31. And if you bought $322,580.64 worth, you'd end up with 4,523.638 shares. Okay, don't be discouraged. Now, $322,580.64 was a lot lower than I thought it was going to be. But realistically, most people, including myself, don't have 300K just lying around. Most of us have to build a large position in SCHD, which requires regular monthly investments. The simplest way I found to estimate how long it would take to get a $322,000 position is to use the calculator from Dividend Athlete. These calculations assume regular monthly investments and don't take into consideration taxes or inflation. We are also assuming a stable 3.5% dividend payout yearly, and we are reinvesting our dividends in these calculations. We're also assuming a conservative 5% yearly growth, which means that our dividend would also be growing at 5% a year as well. Now, I know that's a lot of assumptions, and that's kind of the point. We want to keep this as simple as possible because this is just an estimate, and there are so many unknowns it would be impossible to calculate anyway. As time goes on, we can make adjustments as more information becomes available. So from the calculator, if we invested an initial $10,000 and contributed $1,200 a year or $100 a month for 30 years, we'd end up with $253,944, which is not enough to hit our goal of over 300K. Let's try with a yearly contribution of $2,400 or $200 a month. In this scenario, we get $396,212.31 and a monthly dividend of around $1,130. In this situation, we only invested $79,600 of our own money. And these calculations are actually assuming a relatively low growth rate. Historically, the average yearly growth for this ETF is around 12%. So there's a possibility that the fund is going to do even better than what the calculator is telling us. Now, I know what you're thinking. Raj, I have a lot of stuff going on. This is too much math and I can't be bothered to remember to put money into this position every single month for 30 years. I get it. What if we just want to set it and forget it? How much money would we need over 30 years to get to $322,000 without putting in any more money into the position or giving it a second thought? If you invested $29,000, had an annual dividend of 3.5%, had an annual growth of 5%, reinvested all your dividends and never touched it, you'd end up with $323,859.76 at the end of 30 years. $29,000 as a lump sum sounds much easier than $322,580.64 as a lump sum. Before we get too ahead of ourselves, having a ton of money into one ETF may not be the best idea, especially since this ETF has only been around for a few years. This just sounds kind of risky. My opinion is that 99.9% of people are better off investing into retirement accounts, taking advantage of the S&P 500 over the long term. But if you're willing to take the risk, SCHD might be an extra source of income for you in your retirement. But if we're planning on actually investing into SCHD for 3 decades, we want to make sure that SCHD is at least a legitimate investment. Here's a quick overview of the ETF that we didn't cover, so you can use this as a starting point into your research for SCHD. SCHD is an ETF whose goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. It has a total of 104 holdings, and as of 6/23/2023, its top 10 holdings include Broadcom, Merck & Co., Pepsi, Coca-Cola, Verizon, Amgen, AbbVie, Texas Instruments, and UPS. Now, as far as sectors of the market are concerned, SCHD's current holdings make it heavy in industrials, healthcare, financials, consumer staples, and IT. It has moderate exposure to energy and the consumer discretionary sector, and very little exposure to communication services, materials, and utilities. So I wouldn't say SCHD is balanced, but I wouldn't say it's imbalanced either. And I don't believe this is a one ETF solution for investors. So let's recap. There are a few ways to get to $1,000 in monthly dividends using SCHD. Having $322,580.64 and buying it all up in one lump sum, starting with $10,000 and investing about $200 a month over the course of 30 years while reinvesting your dividends, or invest $29,000 initially, reinvest your dividends for 30 years, and those last two are based on a lot of assumptions. Hopefully this video gave you a little insight on SCHD SCHD and the power of compound interest. Thanks for watching. Be sure to subscribe for more money, finance, and crypto content. And if you found value in the video, hit that like button, subscribe for more, and I'll see you in the next video. Take care.